Hey everyone, welcome back to POA for you. It's Leroy again, and today I'm gonna do an N-level 2020 question from paper 2, question 1. Now, this is a question that is super important because it's definitely gonna come out every year. It carries 24 marks out of the total 100 marks in your examination. So if you get this right, it's gonna set you on a very good start for your exams. Okay, so before I get into it, make sure you subscribe, hit the notification bell, then you will get a notification on new content as I load it up. And if you have a question along the way, feel free to ask me. Just ask me during the through the chat or via email. My email is always on the top left-hand corner of these sheets I work with. So let's get right into it. Okay, so these kind of questions always starts with a trial balance, right? And then you have additional information, and based on the additional information, you're supposed to prepare an income statement or balance sheet. Now, the syllabus has changed in 2021, so some of you may still be referring to income statement as income statement, but some of you have already moved on to the new syllabus, and you refer this to as a statement of financial performance and balance sheet as statement of financial position. Regardless of it, some terms have changed for this question and I'll touch on that, but by and large the question will still be the same. Concepts are all exactly the same. Now, this is a big question, and for big questions you need to get organized, right? So I've in my other videos, 3 steps that you need to make sure you are aware of. And first step to tackle this question is, well, step 1 is the items here in the trial balance an A or B item. So A would refer to the income statement item or the statement of financial performance, or B would be the balance sheet or the statement of financial position. So let's do step 1 first. A income statement or statement of financial performance items are revenues, expenses, income, right? And statement of financial position or balance sheet items will be asset, liability, equity item. So let's go through this. If you don't know what these items are, or these assets, liabilities, and equities and stuff like that are, go and look at my POA fundamental videos. I've touched on that there. All right, so trade receivables, an asset. So payables, a liability, goes to the balance sheet or statement of financial performance. Motor vehicle, a position, balance sheet or financial position, I beg your pardon. Now, motor vehicle and accumulated depreciation will always go together, or the non-current asset and the accumulated depreciation will always go together into the balance sheet or statement of financial position. Cash at bank, asset, capitals and equity, drawings and equity item. Now, commission income, that's other income, so that goes into the income statement or statement of financial performance. Revenues as well. So sales returns are the opposite contra revenue. So it's the opposite of revenues. It's when someone returns you something, right, after you sold them. So that also will go into the statement of financial performance, and it's tagged along with sales revenue, and I'll show you in a bit. Cost of sales is an expense. Inventory, so tricky here, right? You thought that all your B items are done, but no, you got one inventory, which is a current asset. General expense, and motor vehicle is expense. Now you would see in this list there's a motor vehicle here, expense here, and then there's a motor vehicle at cost. The one at cost is your non-current asset. The one that says expenses are the other expenses that will go into the statement of financial performance or income statement. All right, so the motor vehicle at cost is really the cost of the cars, for example. The motor vehicle expenses would be the cost of, let's say, you have to change engine oil in the motor vehicle in your car. So that would be an expense that will not be a non-current asset, but will flow into the expense section of your of your income statement. All right. So moving along, step 2, what do we need to do? You see all these additional information, we got to do journal entries for them. Let's look at that. Okay, for step 2, you need to look at all these additional information, do the journal entries for them. So let's take a look at them one by one. Now, these additional information for N levels, I think they're pretty standard. You've always got depreciation, straight line or reducing, and that's under 5 and 6. You have probably one prepayment, and that's here under item 3, one accruals or something that is expense payables in the new syllabus, that's item 2. And then you've got one impairment loss on trade receivables, that's kind of the third bucket of items. And then you have another item that is income receivable or payable. So these concepts are pretty standard. When you can get your head around them, it will fly by like, you know, a breeze, right? So let's look at that. So commission income of 1380 was due. So what they're telling you is, out of the amount of commission income that was reflected in the trial balance, there is another 1380 that is still due to you, right? So when it's due to you, then immediately you are thinking, I've got an asset, I've got something that I own that has not been given to me outside what I've recorded so far. So that's a new asset because it's something that you own. Assets are what you own. So I will straight away debit commission income receivables. Oops. And then I will credit commission income. Okay, and why do I do that? Because why do I credit commission income? Because commission income is credit in nature, and if I want to recognize the additional commission income that is still due to me, then I've got to increase the commission income that I've recognized in my trial balance. So that's why I am crediting it, because for something that's credit nature, if you want to increase that balance, you credit this. Okay. Then the next one, wages outstanding were 420. So when you think wages are outstanding means you owe them, right? If you think wages are outstanding, what are you thinking? Do you think that this is something that, you know, is something that you owe or you own? Yeah, something that you owe, right? So you owe on top of the trial balance number on wages and salaries that you see on top. You still owe wages of 420. So I'm straight away going to recognize this liability by crediting wages and salaries payables or accrued wages and salaries under the old syllabus 7088, right? Then I'm going to debit wages and salaries. All right, this is to recognize another 420 of wages and salaries that I should recognize in my wages and salary expense, because in my trial balance that's understated by 420, because on top of that amount in the trial balance I still owe 420. Okay, now rent prepaid was 560. So on top of the amount of rent that has been recognized in the trial balance, and and how much is that? That was 10,600. We are saying that guys, you still have you have actually prepaid 560. So the 10,600 is not that much. Out of the 10,600, the expense portion is probably lesser, because in there you have actually 560 that was prepaid. So when you hear prepaid, this is something that you still own, right? It's not something that you have expensed, that you have incurred yet. So I'm going to recognize straight away a prepaid rent, and then I'm going to credit rent and rates. Come on, rent and rates, and I'm going to put 560 here. Okay, so this will credit rent and rates will bring down rent and rates eventually, because rent and rates right here is an expense. It's debit in nature, because expenses are debit in nature, right? And if I want to bring the balance down to reflect what the actual expense is for this year, then I have to bring it down by 560, which means I have to credit it by 560. Okay, so let's move on. What do you have? This is the impairment for loss on trade receivables. So they say 300 owed by a credit customer was considered to be uncollectible. Right? So when this happens, then you've got to look, okay, 300, my allowance for impairment loss, I need to create an allowance, or I need my allowance for impairment loss of trade receivables to be $300. Okay, so I'll look at my trial balance. Do I have any impairment allowance for impairment loss on trade receivables at this point in time? No, there's nothing, so it's zero. So I've got to create an allowance for impairment loss on trade receivables. So my allowance, this allowance account is credit in nature. So if I have zero, I want to bring it to 300, then I got to credit allowance for impairment loss on trade receivables. I'm going to call it TR. Okay, then the other entry is always to impairment loss on trade receivables. Okay, so if you find that you have to, and just I'm going to just put a number in here, right? If you find that you have to, for whatever reason, debit the allowance for impairment loss on trade receivables, then you need to credit the impairment loss on trade receivables. So these two entries always go in pair. If you're crediting allowance, then you debit impairment loss. If you debit allowance, then you credit impairment loss. So you remember that. Practice on other of my video questions and see whether you get that concept. If you don't, write to me. Okay, next, depreciation. Depreciation is always a standard journal entry. Okay, I'm going to move my face out of the way. It's always debit depreciation, motor vehicles, credit accumulated depreciation, motor vehicles. Okay, it's gonna be, then I'm going to calculate 20%. Reducing balance means 20% multiplied by the net book value, the beginning net book value. So let's go and look at what the net book value is. Net book value of motor vehicles is the cost 19,000 less the accumulated depreciation to date. So the answer will be 2,500 is your answer. Okay, so it's the net book value, right? Conversely, when you say straight line for fixtures and fittings, I'm just going to copy the depreciation journal entry and change it to F&F instead of motor vehicles because it's standard journal entry. Just remember this. One goes to depreciation and this is an expense, will be reflected in your statement of financial performance or your income statement, and the other one will add on to the balance sheet item or the statement of financial position item, accumulated depreciation that's already in your trial balance usually. So this one will be 10% times, straight line is very simple, times the cost, which is fixtures and fittings 6,003. All right, that's it. That's it. Wait, oops. That's it. Okay, so it should be 630, and then it's going to credit that. So that is it for step 2, journal entries. Let's take a look at what you do in step 3. Now step 3 is about updating the balances in the trial balance, because some of these balances are no longer valid because you've done journal entries here, and some of it, like for example here, commission income should be credited with 1,380, so your commission income number here would change. At the same time, there will also be new accounts that you've created as part of this journal entries, like commission income receivables. They are not in the trial balance, so you want to make sure you mark it to give it a proper place. Right, so let's look at how we will do all of this. Firstly, I will put step 3 here, and it says update the balances in TB, trial balance, and mark new accounts. So I will go by step 2 as a guide. So step 2, the first thing I see here is commission income receivables. Do I see this in the trial balance? No. So I'm going to mark it either A or B to indicate that this will go to the income statement or the balance sheet, and this will be a B item because it's an asset, and it will be a balance sheet or statement of financial position item. And then the commission income credit, I would see, is there one here? Yep, there is here. So I am going to include the new balance here as 6430 plus 1380, and that's going to be my new balance. I'm going to strike this through as balance that I don't need anymore. Right, I'm going to strike it through. Where is the strike through? There you are, strike through. Okay, and then when I go wages and salaries, I would see wages and salaries here. Yes, I'm going to take this number equals to 24760 plus 420 because I'm debiting wages and salaries. That's a debit balance, so I will plus, and then I'm going to strike through out. Okay, And then this one is a balance sheet item or statement of financial position because it's a liability. So I'm going to put it as B. I don't see, this is a new item. And then prepaid rent is a new item as well, and it's an asset. So I'm going to put it as B. It's a balance sheet or statement of financial position item. Then rent and rates, I need to update this. So this equals 10600. Rent and rates is debit in nature. And if I credit here, that means I got to minus 560. All right, I'm going to strike through this item. Okay. Then impairment loss on trade receivables, I don't see it in my trial balance. So I'm going to put this as an A item because this is an income statement item. This is an expense. So it goes to the statement of financial performance or income statement, and allowance always is a balance sheet item. So it goes to B because I don't see any of these accounts in the trial balance. So I'm just going to mark them as a new item to A and B respectively. Then depreciation expense would always go to the income statement or statement of financial position or performance. And there's an update to accumulated depreciation equals to 6500. You'll notice that it's on the credit side, so it's credit balance, yeah? Plus this because it's credit, so that's done. And I'm going to strike through the... Okay, then I will go into the next one, same thing. Depreciation is A and accumulated depreciation 630. For fixtures and fittings, I would have to work on that, and this I will strike through. All right, so that's it. The 3 important steps to tackle this question. The next part of this video, I will then show you how to transport the good workings that we have done so far into the statement of financial performance and position or income statement and balance sheet seamlessly. Let's look at that. Okay, let's now do part A of the question, which is the income statement or statement of financial performance. We will transfer all the hard work in step 1 to 3 that we did before into this. Now, this is a standard format that I put here, and in this you can get the structure of this format in all your syllabus outline, right? So 7086 under trading business, where you have sales and cost of sales, this is where your standard format is, and then less cost of sales, you get gross profits, other income, and then other expenses, and then profit for the year. Under syllabus 7088 at around page 36, you would see similar format. So make sure you are familiar with this format. Okay, so what I've done is I've done this, so I'm going to start transferring stuff. I know I'm gonna need all the A's, so I'm going to focus on all the A's, right? So I'm going to take sales revenues first. This is equals to this number because there's no new number here. Then I'm going to cancel out or mark this as done. Then I'm going to, and it's important to mark stuff that you have transferred to your format, right? Because then when you and I'll show you why, right, in a bit. But make sure you cross out whatever that you have transferred to the income statement, like what I did. So I'm going to calculate net sales revenues, then which is the sales revenues less sales returns. I'm going to take cost of sales. I'm going to mark this as transferred as well. Then gross profit, which is the direct profits of just selling the whatever you sell. If you're a bookstore, you're selling books. If you are a store that sells pens, then you're selling pens, right? Then we have other income. What do we have? Commission income. So commission income, I'm going to write here commission income. And commission income this time round is no longer 6430. So I've crossed this out. I know I have a new number here. So I'm going to put it there. I'm going to cross it out. Then that's it for income, right? Then the rest of the A's here, these are expenses. So I'm going to take this whole bunch of expenses, I'm going to copy it, boom, I'm going to paste it there. I know my general expenses is here. Okay, I'm going to take these two here, rent and rates, and then the last one is motor vehicle. So I've transferred all these 4 items. Bearing in mind, if there's cross out, I'll take the latest balance because that's what I did in step 3. Now, all the A's in the trial balance have been done. So I'm going to go into the journal entries to see whether there are any other A's. And yes, there are a few A's. 1, 2, 3. I'm going to transfer all the A's here. You see, so if you have done your workings right and you are familiar with this step, then it's pretty autopilot when it comes to step doing part A and B, because you are just taking your workings and then you are transferring it to the statement of financial position or performance, or the income statement and balance sheet respectively. Okay, so I'm going to take this. This is depreciation motor vehicles is 2,500. Oh, do I have the number? No, I don't. 2,500. And then fixtures and fittings is 630. I'm going to also mark all my A's here as done. All right. Gosh, what is happening? Okay, as done. So I'm going to cross this out. So a quick check before I close off my my income statement. All my A's have been transferred from the trial balance and the journal entries. So my income statement is done. Part A is completed. And so just before I go into part B, I'm going to mark this profit or loss for the year as B, because this will go into my part B and I'll show you in a bit. I'm going to just copy all these areas. I'm going to put the income statement down away from the screen, and I'm going to focus on the balance sheet or statement of financial performance position. So I've again copied a format here, and now let's try and work on this. Okay, so the first one is non-current asset, and this format again is in your syllabus outline like I showed you for the income statement, so go and look at it to get familiarized with that. So I got motor vehicles, I got fixtures and fittings as two non-current assets. I'm going to take the cost of the motor vehicles. Oops, let me just align this a bit properly. Okay, I'm going to take the cost of the motor vehicles. I'm going to put 19,000 here. There's always accumulated depreciation, and this one is outdated, so I'm going to take the new balance here. And I'm going to take the fixtures and fittings cost here, and then I'm going to take the accumulated depreciation here, and then net book value equals this minus this equals to this minus this. Oh, one thing I forgot to let you guys know for your income statement, you got to probably put the workings of some of these balances here. So for example, I think rent and rates, your examiners would want you to have to show this, right, in your rent and rates, the new number, something like that. Okay, so make sure you put this against all the new numbers for the income statement. So even for wages and salaries, you need to put this here, and it goes like that. Okay, so going back to the balance sheet or the statement of financial performance position, so the non-current assets is done, transferred. I'm going to mark it out. Current assets, so first thing I see, I go from the top, trade receivables. So I'm going to take this, I'm going to put it here, I'm going to take the balance here, put it here, and then I'm going to after trade receivables, I'm going to mark this as done. I'm going to just leave a blank here for now. Okay, but you guys always remember that you have always allowance after trade receivables, and let me just manage these items in the trial balance first. Cash at bank is credit side, so that's going to be a short-term borrowing, it's not an asset. Next, cash in hand. I'm going to cash in hand. Spelling. So I'm going to put it here. Okay, I'm going to mark this out as done. And the next thing, inventory. Okay, I'm going to transfer inventory as well. And then, so inventory is done as well. And we do a quick check on the B's that's left. No more assets, so we go to the equity liability side. Now equity, I know in syllabus 7088, it's this format where you have beginning balance, which is this number. You add your profits, which is from your income statement that we've done just now, and this is the B that we've done. So I'm going to put this B as marked because I've moved it to the balance sheet. And then less drawings, which is here. Alright, so I'm going to mark these two as well as transferred. Then current liabilities, we have trade payables of 18120. This is done, and then we have only cash in hand, which is a credit balance, which means that is a short-term borrowing, right? Because it's now something that you owe the bank and not the bank owes you, so it's no longer an asset, it's a liability. Credit balance is always a liability. So that's it for the trial balance. Then I'll move on to the journal entries because there are some B's here that we need to transfer, right? So firstly, commission and income receivables, that's an asset. So I'm going to put it as a current asset. And then how much is that? I'm going to take it and then put it in here. And then I'm going to mark this B as done. Okay, important to cross out, because sometimes when you don't cross out, you may miss out some stuff. So this wages and salary payables, or accrued wages and salaries, depends on which syllabus you're doing, is a liability. So I'm going to put it here, and then I'm going to call this 420. I'm going to mark this as done, and then prepaid rent, I'm going to put it as a current asset in the current asset section. And this is gonna be up here, current asset, prepaid rent. I'm gonna mark it as done again, just to make sure I have the discipline to cross it out. Allowance for impairment on trade receivables, that's the last item, so I'm gonna mark this as done. It's 300, so I'm gonna copy this, and I left a space for trade receivables, right? And then I'm gonna put here as 300. Okay, so that's that, and let's look at my trial balance. Oh, what's okay, sorry, then this one has to be equals to this minus this. I'm gonna add this up, and that's it. This one is equals to this plus this, some mathematical adjustments. Okay, the balance sheet on one page. Okay. Alright, so hope this has been helpful. Remember, those 3 steps are super important. Once you've done those 3 steps, it's about just based on the standard kind of format for your income statement and balance sheet, or statement of financial position or performance, just taking those A's and B's and putting it in the right places. Alright? Any questions? Let me know. If you got a friend who you think will benefit from this, please share it with them. Alright, take care for now.